Huge day for Google. The company just announced a 20-for-1 stock split, and the stock reported earnings after the bell, and it is up huge. We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there, and if you own Google shares, you are doing a happy dance, because in the after hours, the company reported earnings, and we'll get into them. We'll take a look at the revenues, the profits, the balance sheet, all the different business units as well. You got YouTube, obviously, Google Search, the big business. We got Google Cloud. Is that finally profitable from an operating perspective? We'll take a look again at this balance sheet. We'll look at cash flows, and then we'll come over here and look at this stock chart. Before announcing their earnings and the stock split over at Google, stock was at about $2,750 per share. In the after hours, it is popping up nearly $200, close to $2,950 per share. Talk about, should you buy this one before the split or just wait until after? We'll always have that discussion when we see a stock split like this. Over the last year, you're up 48% on this stock. They came in with their earnings. That revenue came in at $75.32 billion. We'll show that to you over here when we get to the numbers. So we're going to look at it kind of granular. We'll take a look at the different business units, and then we'll take a step back and look at it a little bit more broadly when it comes to Google. Now, that is 32% year-over-year growth on that revenue side. Google Services up 69.4. That's your main bread and butter advertising business. Google Cloud came in at $5.54 billion. We noticed in the previous period, it was just at 3.8. So a year ago, you were at 3.8. Now you're all the way up 5.5. That's got to have investors excited as well. Other bets, just $181 million. Nobody's investing in Google for those other bets. Let's take a look at the different business segments over at Google. Right-hand column is 2021. You got your Google search coming in at $43.3 billion out of your $75 billion of total revenue. More than half is still kind of that Google search, just bread and butter, click on an ad, do a search type of business. Now you got Google, YouTube ads. That's here on YouTube. That came in at $8.6 billion. Last year, we're sitting at about 6.9, just phenomenal growth over at YouTube. Google Network. This is also advertising, essentially like AdSense and stuff like that on people's websites. Went from 7.4 all the way up to 9.3. So just your straight advertising business all the way up to $61.2 billion. Last year, you were closer to $46.2 billion. Now they've got some other revenue here coming in at $8.1 billion. So you've got this service revenue coming in at $69.4 billion. Now we talked about cloud as well. That came in at that $5.5 billion. The thing we've been watching with cloud over the last several quarters is here's we come down to operating income. So this is basically the profits they make off of each of these different business units. You see here for their services, off of $69.4 billion worth of revenue, you clear nearly $26 billion worth of profits on that. That's obviously absolutely phenomenal. Google Cloud not profitable yet, but sometime in calendar 2022, we should see profitability because we see how this is moving in the right direction, right? Last year, off of $3.8 billion, you lost $1.24 billion. This year, off 5.5, you're very close to break even. In fact, we'd expect likely probably within the next quarter or two, Google will turn a break even unless they get really aggressive on pricing and things like that on that Google Cloud. You should go profitable at some point, maybe toward the back half of this year. $890 million loss on that one. That's good to see, especially when these growth rates appear to still be ticking in the right direction on the revenue side. Then obviously operating profits should follow at some point. Everything else loses money at Google. You get your total income from operations coming in at $21.8 billion off of $75 billion worth of revenue. I don't really need to tell you how spectacular that is. Now, the question lingering on a lot of investors' heads are, should you buy Google stock before or after the split? And I don't want to hurt anybody's feelings here, but this is the investor channel, not the beginning investor channel. Look, it doesn't matter if you buy it before or after the split. The stock value is exactly the same the day before the split and the day after the split. You're just dividing the shares up into more. Now, we know that stock splits tend to drive prices up, especially when it comes to retail investors that don't understand that the value of your shares are not going up when you do a stock split. So I personally would keep following along on this video, because what we want to see with Google is, do we have value? We got $1.7 trillion valuation on that one. That's not including the after hours pop, which probably is going to push this up closer to $2 trillion. We've got a forward PE of just 25 on this one. fund. And I think that's absolutely phenomenal. The other thing that we have over at Google is just a pure just financial stability. We'll go over the operating profits and the net income here in a second and cash flows more importantly, but take a look at this. Total cash and cash equivalents over at Google is $140 billion. And we know based on the regulatory environment, they can't go buy TikTok. They're not going to be able to go buy Snapchat. They wouldn't be able to go buy Pinterest. So there's literally nothing that they're able to do with this money except kind of reinvest it in their own way into their business. We'll also talk about how they're buying back shares as well over at Google. They don't have a lot of use for this cash, but this cash does serve as a level of stability when we talk about a stock with a $2 trillion valuation. Now, the company does have a little bit of long-term debt, but very little. Out of all the FANG stocks, this company has likely some of the least amount of debt outside of maybe Facebook as well. This is just about as crystal clean as it possibly gets. You have total assets coming in at $360 billion. Total liabilities, just $107 billion, and just 14.9 of it is bank debt. This company is about as good as it gets from a balance sheet perspective. That is why you wouldn't buy this stock because they're doing a stock split, but you buy it, you could make the argument that the balance sheet is so good that this company has lots of ways to survive, and not only that, thrive into the future. Now, in terms of our revenues, we came in at that $75.3 billion. What we want to see is, look, we know they're like monster profits over at Google, but what we want to see is, are they controlling cost? Okay, you went from 56 on the revenue side, call that 57, up to about 75. For the full year, you went from 182 up to 257. How are we doing on these costs? Look, they're not moving a whole lot, okay? We went from 41 up to 53. That's adding just barely $12 billion and some change onto that cost side. That's well in excess of what we're doing on this revenue side. That is bolstering up our income from operations when we went from 15.65 billion all the way up to $22 billion. You see for the full year, look at this. We went from 41 all the way up to $78 billion worth of income from operations. So take a look at that. You just had a quarter where you did $75 billion in revenue. For the full year, that's about what Google does in income from operations. This is as good as it gets. I don't care what the price is with Google. I don't care what your rationale is. You got to be in this stock. This is just absolutely phenomenal results. We don't see this from outside of just a handful of companies. And when you couple that the balance sheet is actually better, quite frankly, do they have as much cash as like an Apple and some of these other ones? No, but this balance sheet from a debt perspective and just a cleanliness perspective is as good as it gets, quite frankly. And these operating results, when you print $75 billion to your revenue side and you come down, you pay your taxes, you pay everything, and you're left with $20 billion, nearly a third. You're left with almost a third of your revenues flow all the way down to profits. You don't see this very often. I don't care if it's a small business or a big business. This is one of the greatest companies you could possibly invest in. And you see for the full year, same thing holds true. You had $257.6 billion worth of revenue, and $76 billion comes down to that bottom line. Look at the diluted earnings per share, just $112 per share. And they've been buying back those shares. We'll come over here to cash flows. You can imagine when you're flowing this much profit down to your bottom line off of that top line, you know your cash flows are probably going to be as good or better. Take a look at this. For the quarter, off of that $20.6 billion in net income, cash flows paints an even better story. You almost never see this. Up to $25 billion worth of positive cash flow in the quarter. For the full year, off of $76 billion worth of net income, because you have large amounts of depreciation, this is probably the server cost that Google operates to run YouTube, run their own search engines, run a Google Cloud and stuff. So those servers are pretty expensive, right? And they depreciate pretty quickly, okay? I can't imagine that those things have a very long useful life. So you get to add back in that depreciation. You also have relatively healthy stock-based compensation. It's not egregious, but it's pretty high. For the full year, you had $15 billion worth of that. You had another $11 billion in depreciation. Those are obviously non-cash things. So when you start adding those back in, well, look, your net income was 76, but your positive cash flows from running the business, $91 billion, nearly $100 billion worth of positive cash flow for the full year. And so you start backing into this. Right now, it's 1.7 trillion valuation. We'll just bump it up to about $2 trillion on Alphabet. Look, it's still, in my opinion, pretty reasonable, especially when you factor it in from a positive cash flow perspective. Also, we have to factor in this growth rate as well. 32% revenue growth year over year on this one. That's absolutely fantastic. Now, we come down here, we notice that they are buying back the stock. That's the one thing that they are doing with the shares, is that we retired about, about $50 billion worth of buybacks over the last year. They also repaid quite a bit of debt, down to about $21 billion. This company is just cleaning things up. They're reducing the number of shares, although that would obviously will balloon quite a bit when they do the 20-for-1 stock split, but you also are repaying that debt as well. You gotta love this. You gotta love what's going on at Google. Now, from a technical perspective, you gotta love it as well. It was down here. It actually bottomed out here at about $2,500 per share. That's where we had this one marked out, and it has, boom, rocketed up to the top end of a range here. Now, the fact that it's not busting up above 3,000, this red line right here is about $3,000 per share. That should be an area of resistance with Google. We'd actually expect the stock to stall here. If it doesn't, that is incredibly bullish. If this stock for some reason can get above that $3,000 range, look out above. This thing could probably run 10, maybe even 20% if it really got the retail investors behind it. Now, if this stock gets what we think, it hits an area of resistance. Look, it's hit its head over here over the last couple of months. It's hit its head at 3,000 and it's pulled back. Sometimes it's pulled back to 2,700. Sometimes it's pulled all the way back down here to $2,500. This is a stock that you absolutely buy on these pullbacks. The stock split makes absolutely no difference. I will repeat, the stock split on Google doesn't change the valuation, doesn't change the value of your shares. If you pay $100 for shares of Google and the next day it does a 2-for-1 stock split, the value of your shares is still $100. I repeat, the stock split does absolutely nothing, but what it will do is it'll reduce the price of these shares tremendously. So if for some reason you're in an account where you can't do fractional shares, well, you're going to be able to scoop these up at a much lower price from a physical perspective. And so that could increase the amount of people willing to pour in money over at Google, because look, the stock is at $27.52. And if you don't have fractional shares, especially in an IRA account where you're limited on your deposits every year, well, obviously that could chew up a lot of your deposits. This is absolutely wonderful. I love the stock split. I love where we're approaching technically. We're up here at 2,900. We're going to monitor this over the next couple of days. We get any pullback south of 2,800, I think that creates buying opportunities. We're also looking at the same breath, we're looking for a break above. I wouldn't really want to step in here at Google right now, because you're either going to get, I think the highest probability is we're going to get rejected at this range and come a little bit lower. That's going to create a buying opportunity down there. Otherwise, I think you want to wait for the breakout, the confirmation above that area of support. You want to get this one above $3,000 per share. Then I think you could step in and essentially pay the breakout. And quite frankly, if you got above 3,000 on this one, that would basically just put us back into this uptrend right here. Notice this uptrend that we've been, you can even stretch this all the way back here if you want, but it looks a little cleaner here. The stock's obviously been an uptrend, but look, we broke it more recently, okay? The stock broke down, came down here to 25. If we can get back above 3,000 very soon, well, this stock is technically, this was just a blip in the radar. Now, again, like I said, I don't expect that to happen. I would expect us to hit our head at this area of resistance up here, pull back. That's your buying opportunity for Google. Hopefully you guys enjoyed this video. One of the best companies we look at every single year, and I think you want to get on this train if you haven't already. That was Google. Good luck with your investments.